The financial crisis demands a considered response. The global financial crisis, which began in 2007, has come as a huge wake-up call to us all, the financial community and indeed the world at large. In response, the G20 leaders have demanded legislation to create safer and more resilient financial markets. How we address these changes is a huge responsibility and critical to the long-term health of global capital markets. And in this process, we must keep one thing in mind. The markets are not only the concern of the exchanges or the banks, their health is vital to people who invest their money and their pensions in these markets. People like you, the investor. A lot has changed, but some things must remain the same. From the very earliest markets, certain principles have been critical to create the trust that allows for the markets to operate effectively. Markets have always been driven by supply and demand. More supply and the price goes down, more demand and the price goes up. But with supply and demand constantly changing, the more open and transparent buyers and sellers can be about the price they're willing to pay or accept, the more representative the market price will be. We call this price formation, and it's the cornerstone of an open and fair market. With the open outcry market, every order to buy or sell was recorded in an order book and shared openly in the marketplace. The transparency of the order book system allowed a rapidly increasing number of buyers and sellers to agree and trade at a fair price. This same philosophy exists today, even though the order book is now electronic, and the number of trades are vast and the types of trades hugely varied. And as markets have grown and access has broadened, there was a need for a trusted third party, or central counterparty, to protect the interests of all, guaranteeing the delivery of goods to the buyer and payment to the seller. This combination of transparency, supported by a respected central counterparty, is what creates an umbrella of trust, under which both buyers and sellers can operate effectively. Stock exchanges around the world provide the structure and rules to ensure prices are fair and this trust is maintained. And it's this trust that fuels growth and creates thriving markets. A more complex world demands clearer legislation. NYSE Euronext is the embodiment of these fundamental market changes. Evolving from a series of independent stock exchanges in Europe and North America to become the first truly global stock exchange. We now execute 8 million trades in all asset classes every day across Europe and around the world. But in spite of these massive changes, we believe one thing must remain the same for markets to operate for the benefit of all. We must have clear and consistent rules that protect all parties. Changing rules revolutionized the market. In the early 2000s, the EU negotiated a radical new package of legislation called the Financial Services Action Plan. Its aim was to remove the financial barriers between European countries and encourage a single capital market to complement the introduction of a single European currency. The cornerstone of this package was MiFID, or the Markets in Financial Instruments Directive, to give it its full, less catchy title. In 2007, when MiFID was introduced, it brought revolutionary legislation designed to fundamentally change securities trading across Europe. Much of this legislation has been incredibly effective, opening markets and encouraging competition. However, as the legislators predicted, there were consequences in creating greater competition. The changes in regulations saw the sudden proliferation of new trading venues, all basically performing the same function, but with different rules governing them. It also led to an increase in trading away from regulated trading venues. Without consistent rules, the transparency of the market inevitably suffered. And as we've already seen, transparency is fundamental to the operation of an open and fair market. Same business demands the same rules. MiFID II presents a unique opportunity to address the demands of the G20 leaders and also the issues that arose from MiFID I, particularly the issue of transparency and how it must be maintained to protect the long-term security of the market as a whole. But ironically, transparency isn't as clear as it might seem. There are different kinds of transparency required in different trading situations. Pre-trade transparency is different from post-trade transparency. and the type of transparency needed in cash equities is different from that needed in derivatives. We believe that if legislation is viewed through the lens of transparency, the objectives and opportunities of MiFID II become much clearer. Clear legislation is in everyone's best interest. At NYSE Euronext, we believe our ever more complex world requires even clearer legislation. Legislation that protects the interests of everyone, right down to the individual whose hard-earned savings or pension contributions are invested by banks, pension funds and other institutions in the global market, to generate growth on a global scale and ultimately on behalf of the individual. A virtuous circle that demands complete trust and transparency. This is a huge responsibility and one that shapes our actions every day. What next? The information on our EU Policy Channel website explains the detail of the upcoming changes to regulation, including some of the more complex concepts that it addresses. We also explore the sort of legislation that will protect the function of the markets and, as we said at the very beginning, look after the interests of the most important market participant, the investor. To learn more, visit www.nyx.com/EU policy.